It mind boggles me that people invest their hard-earned money with their feelings, with their emotions. Rule number one, don't lose money. And rule number two, go back to rule number one. Hi everyone, and welcome back to the SCHD channel. My name is Ivan. Today we're going to talk about a very important topic, making your hard-earned money work for you. It's no secret that making money, it's a very good thing. But what's even better, making that money work for you the right way. This should be your number one objective and your only objective. You can buy assets that will become a soldier that works for you 24/7 if you let it grow long enough. However, how you go about this is very important. You can take the slow and steady path, or you can travel very fast. But beware, if you travel very fast, you may burn out and crash because it will run out of fuel. You don't want to make mistakes with this one. I want to show you the wrong way to go about it. You can go ahead and buy individual stocks, where the higher the risk, the bigger the rewards. But if that is true, look at these three stocks like 3M, AT&T, and Verizon. This is the number one reason why you shouldn't own individual stocks. Even though they pay dividends, what guarantees that they won't cut them? And it's all worthless if the shares are being diluted. Do you have a crystal ball? Well, I don't, and neither those who claim to show you the metrics on why you should own individual stocks in the first place. No one knows what's going to happen to any particular stock. So why take the risk when there's a better way? I keep asking myself and people, why do they own individual stocks when they can own them all? And this is the right way, the slow but the for sure way. If you want to accumulate wealth, buying an ETF will just do that for you, and the ETF will do the heavy lifting for you. You don't need to worry about a thing. You do not need to worry about tracking the stocks because the ETF is already doing that for you. Now, you might ask, what's an ETF? An ETF is a type of investment fund that is traded on an exchange like a stock. ETF holds assets such as stocks or bonds or commodities and typically aim to track the performance of the underlying index. You can choose a market cap weighted index that tracks the market, or my favorite route, a dividend ETF. A dividend ETF is an ETF that invests in companies that have a history of paying a dividend to shareholders. This can be a great option for those who want a steady stream of income from their investments. It doesn't have to be so hard. That's why I buy SCHD every day, because no one knows what will happen, and that's including myself. By buying an ETF such as SCHD, you are essentially buying a basket of 104 stocks that have a history of paying out dividends. And like I said, that's why I buy this ETF every single day, no matter the price. Sometimes I'll overpay and sometimes I'll underpay because nobody knows what's gonna happen. So buy this ETF, forget about individual stocks. It mind boggles me that people invest their hard-earned money with their feelings, with their emotions. If you like a company, you can do it, but do it wisely. Do not spend all your hard-earned money into companies that might not make it to the next dividend payment.